Hello dear students, welcome you all for the fourth session of the fifth chapter Business Taxation for sixth semester, Bangalore University BCom. So in this session we are going to discuss how the input tax credit can be apportioned. How? So my session will contain goods or services used for the business purpose, how the goods or services are apportioned, which are used for the business purpose, then which are used for non-business purpose, then goods and services which are used only for effecting taxable supply, then optional method for bank, etc. for taking input tax credit. Okay. So first case where goods or services are used wholly for business purpose, how we are going to apportion the input tax credit. So here entire amount which is used for the purpose of business can be claimed as credit or can be apportioned as input tax credit. So entire amount can be claimed as input tax credit. Where goods or services are used wholly for non-business purpose. So here entire goods or services you are using it for business purpose, you are using it for non-business, maybe personal or other purposes. So here no credit can be claimed. So you cannot apportion the transactions amount or tax to ITC. Then where the goods or services are used partly for business purposes and partly for other purposes, there may be a possibility that 50% or 60% you may use the goods to business purpose, another 40% you may use it for other purpose. Now in this case, so whatever the goods that you use for business purpose, only till that amount or whatever the tax related to that particular goods will be available for input tax credit or can be attributed for the purpose of this business or can be available as input tax credit. Then where goods and services are used only for effecting the taxable supply. So entire goods and services are used for effecting a taxable supply on which you are paying the tax. Then the entire amount of credit can be claimed. Entire amount can be apportioned to ITC. Then where goods and services are used partly for effecting taxable supply, including zero rated supply, then partly for exempted supply. So what happens in this case? So in this case, whatever the goods or services which are used for partly affecting the taxable supply, including zero rated supply, only that particular amount of goods are available for claiming ITC. Whatever the tax that you have paid on such goods will be available for ITC. So here in this case amount of credit shall be restricted to so much of the input tax as it is attributable to the said taxable supplies including zero rated supply. So this is the summary of whatever I have explained in the previous slide, chart showing apportionment of credit. So here input taxes, so it is goods and services are both. So where you will pay the input taxes, so input taxes you pay for the purchase, whatever the purchase. So if the purchase is purchase of goods is used for business purpose, then you are eligible to claim ITC. If that purchase or whatever the goods that you have received, if it is used for non-business purpose, then you are not eligible to claim the ITC. Then regarding the input taxes, regarding the taxable supply. So here whatever the goods and services that you have brought, and if it is used for taxable supplies, in the sense taxable sale, then you are eligible to ITC. If the goods and services that you have purchased is used for exempt or exempted supply, then you are not eligible to get the credit. So this is the brief chart showing the entire explanation of apportionment of credit. And the next one is optional method for banks or financial institutions who do the business of lending loans and accepting deposits. So they have some option in claiming the input tax credit. So let's discuss that. So banking company or financial institution, including a non-financial company engaged in the supply of services by way of accepting deposits, extending loans or advances, shall have the option to either comply with the provisions of section rule 72, that is as per the normal provisions, or avail every month an amount equal to 50% of the eligible input tax credit on input of capital goods and input of services in that month. So they can avail monthly or annually, so both chances are there. So but they have to select one option. So if they are going for a monthly option, then only 50% can be eligible. 50% of the tax is eligible as input tax credit. So once the option is exercised, then it cannot be withdrawn. Same option has to be followed every year or throughout the financial year. So further, the restriction of 50% shall not apply to tax paid on supplies made by one registered person to another registered person having the same permanent accounting number. So if the business entity has same permanent account number registration and they are supplying from one entity to another entity, then that 50% will not apply to them. So this is the optional method for the banks regarding the utilization of credit. So that's all from this video. Thank you for watching this video.